Hello students, I have attempted to explain the product by value analysis using a simple illustration, and I expect you to watch this video after watching my studio recording of product by value analysis. Product by value analysis is a tool to select a strategy based on the value a product creates for the organization. What I have done is like I have selected Maruti as a case for our discussion, and what you see in this table is that I have taken the various models of Maruti and the various sales data. This is taken from their annual report. I think it's about a couple of years back, and some of the data I have filled in based on some thumb rule. So this is not very precise, but it will not be very different from what is actual. You can also look at this models. Some of the models I have not considered, so it's not a very comprehensive product by value analysis for Maruti, but it is just a small case for demonstrating product by value analysis to you. The first column is all about the models. The second column talks about the units, the number of cars in each model sold in a year. For example, 164,110 um, units of Alto were sold on that particular year, and the Omni 42,100, and so on and so forth. So they were selling about 700,000 cars a year during that year. And what you see here is the sales that they generate from each of the models. So when you look at this, I have given this number 49,889 in terms of the million INR, which may be a little confusing to you. So I have given the crores also within the bracket. So it's about 5,000 crores that they generated as a revenue from by selling Alto about 164,000 units, and similarly about 1,000 crores by selling about 42,000 units on that year, and so on and so forth. Okay. And the next data that we are concerned for the product by value analysis is the contribution. Contribution is something which the contribution to the indirect expenses. That is, when you take the total sales and remove the direct expenses, what remains is the gross profit, and that is what goes into the contribution. Okay, this may not be a very precise definition from a financial angle perspective, but for our discussion this could be good enough. So if you see, by selling 164,000 units of Alto, Maruti generated a revenue of about 5,000 crores and a contribution of about 900 crores. Okay, and if you from this you can easily compute what is the unit contribution. Unit contribution means what is that the company realizes as a gross profit from Alto by selling one unit of Alto. So that's about 50,000 rupees. And the Omni is about 40,000, Wagoner is about 80,000, and things like that. So this is the data that you need for building a product by value analysis. Now let's go to the next slide and then see how this is being utilized. What I have done is that I have constructed a grid. Okay, and in this grid I have taken the unit contribution on the x-axis and the total contribution on the y-axis. So I have brought the same value from the previous slide into this table. The unit contribution means the money that is realized by selling one unit of a given product, and total contribution means the money that is realized by selling all the units of a given product. So this is all in thousands. So if you see 0.02, it actually means that 2,000 rupees, sorry, 20,000 rupees, 40,000 rupees, and so on and so forth. And this is all given in million INR. So if you remove 10, then it means it's so many crores. Okay, so I have constructed this grid, and I have conveniently given the scaling also here, x-axis and y-axis. So what I'm doing now is that I'm plotting these values in this grid. So for example, if you take Alto, the unit contribution is 0.05, which is here. Okay, the 0.04 is center, this 0.06 is the center, and this is 0.05. So I have taken on this axis, and the total contribution coming out of Alto is about 9,000, which is coming somewhere here. This is 8,000, so this just above that is 9,000. Okay, and this is not constructed on a graph sheet, so it may be slightly off in terms of the scaling. Okay, right, I have tried to be as accurate as possible, but this is just constructed using a table, so it may not be really accurate, but for our understanding that should be good enough. So I have plotted Alto here, Omni here, Wagoner, Ertiga, Swift, and the Desire here. So these are all the various products that are plotted, and I have also split it into 4 quadrants by drawing a line at the center. So you have 4 quadrants, 1, 2, 3, 4. Now with this construction, what is the strategy that we should be proposing for each of the product is what we are going to discuss. Let's look at it. Now any product that is falling into this category, okay, where the unit contribution is less and the total contribution is also less, then you should actually be getting rid of that product. There won't be any, I mean, it is not a product that you will be able to generate a huge revenue going forward, right? And you can fairly consider that this is in the decline phase of the product life cycle. So the strategy for this is to get rid of them because they have already lived their life. When it comes to the next one, this is the quadrant, the second quadrant, wherein we have the unit contribution pretty good, okay, whereas the total contribution is not very high. The reason for that is like selling each Ertiga, Maruti is realizing good revenue, but it is not selling sufficient number of Ertiga. So what they should do, obviously they should grow the product. They should sell more of Ertiga. So the focus should be to grow this product. So where exactly is it falling in the product life cycle? It is falling in the growth phase. The next one is this quadrant, wherein you have a good unit contribution and a good total contribution, which means that you are actually leading the market. And this is the quadrant wherein everyone wants to be. If that is the case, what will be the characteristic or the feature of this quadrant? This is the one which is getting the maximum money for the organization. And this is the place where all the organizations try to be. So there will be a huge, a follow through competition. So everyone will try to fill in this category. So what you should do when you are into this category, you should try to maximize your benefits and try to improvise things so that you can continue to stay and lead the market. And you can see that this is the segment wherein Maruti is also making good progress. Desire and Swift has been very successful for them, and they continue to lead the market in terms of the market share. Okay, then when it comes to this quadrant, in this category, in this case, there are no cars, whatever we have taken for our discussion, none of them are falling into this category. But you will know that if you are in this category, it means that your unit contribution is less, whereas you are selling a lot of them, which means that you have good number of sales, but each one of them are not getting you very good contribution. Such being the case, what you should be doing, you should try to increase the contribution either by raising the price or by cutting the cost. So when you raise the price, you improve the unit contribution, and the same effect is achieved when you cut the cost also. So when you are here, this is what you should be doing. So when you actually look at it, you know that you cannot apply a particular product strategy or a marketing strategy for all the products. And this product by value analysis actually helps you to decide what kind of a marketing strategy that you should adopt for each of the product that you are manufacturing. And this is equally applicable to the service industry also. So I said like this is the decline phase, This is the growth pace, this is the maturity pace, and this is the late part of the maturity, which means that it is just getting into the decline pace. So if you look at the progression, you will first start with the growth pace, then you will move to this quadrant. From here you will go to this quadrant, and then you will come to the get rid quadrant. So this is how the product life cycle is superimposed on this product by value analysis. Thanks for watching this video.